And a lot of people don't.
We're live. We're live. Good evening. Good evening. Good evening, everybody. How you doing? Hey, thank you for joining us. This is Wonderful Wednesday, January 26, 2022. And right now, I have the lovely Shateka Husser with me, the financial planner. And the difference right now is, like I told you folks, on these platforms, what we're doing, we want to educate. We want to help. What's the sense of you having knowledge if you don't have nobody to share that knowledge with? It's like a lot of things that she have exposed me to and helped me to understand. It's not how much money you make, it's what you do with the money that you make. And better yet, how you be prepared for what we call the future. Because life's going to happen to each and every one of us. And the worst thing that can happen in life, when you're not prepared, you can't make a withdrawal if you didn't make no deposit, if you didn't plan accordingly. So if you don't plan accordingly, you know what you're doing? You setting yourself up to fail. But not only are you setting yourself up to fail, you setting up your loved one, your kids, your spouse, you setting them up to fail. So at that note right now, what we're going to do is I'm going to turn it over to Shateka. And what she's going to talk about is today's topic. What's today's topic, young lady?
And we're talking about the banks, right? And infinite banking that people, often talk about, but they don't really understand. And everybody wants to know a little bit more about it. So I just wanted to, share some more information around it because I feel like our community really needs to know more about infinite banking. It's been around for quite some time. It's just become a buzzword in our communities here lately. But the wealthy have been doing it for so many years. And it was something that, Nelson Nash actually started years ago. And unfortunately, most people only know it, from a whole life policy perspective, but there's some other vehicles that you can use it for. The main thing is that, you have to figure a way to be able to generate cash flow and have your money compound for you at a higher rate than your bank account is doing today. So most people's bank accounts like 0.01 or something like that, right? But what is inflation at today? It's around 7%. And so the goal is to be able to put your money aside some type of vehicle or asset that's going to yield you at least 7%. If not, you are what? Becoming poorer and poorer. And so we don't want our people to become poor. And that wealth gap is getting wider and wider. Okay, when you look at the numbers, 100 and six figures is the annual salary, and other races versus the African American community at around 24,000 annual. That's a big difference. And in terms of, wealth. And so our wealth number needs to come up. And if our wealth number is going to come up, we're going to have to figure out a way to make money while we're sleeping, especially with all we're doing is trading time for money. So, I often talk about, the cash flow quadrant going from the left side of money to the right side of money. 95% of people being on the wrong side of money because they're trading time for money, rather that's self-employment or W-2. Nothing wrong with that. But I think it's seasonal for most people. It's not forever. And so unless you can figure a way to move from the left side of the quadrant to the right side of the quadrant, meaning you become a business owner an investor, then you're going to be on the wrong side of money. So that's 95% of people on the wrong side of money because they are not necessarily investing their money or being a business owner. They're working and trading time for money. Why is that important? Because you want your money to make money for you while you're sleeping. And business owners and investors can do that because literally they have other people doing the work, or their money is literally working for them in the economy or, in some type of vehicle for them so that they don't have to exchange their time for the money. So we're talking about the bank on tonight because everybody here is not aware that you could actually put your money inside of your own bank account. You can make or create your own bank account is what we're talking about tonight. How do you create your own bank account? Is that you have your money in what's called some type of policy. I just put it out there. Tonight we're going to shoot it straight, put your money inside of a policy. And we talked on a few lives ago, a few nights ago, we talked about how there's 6 steps to financial freedom. And we told you that all 6 steps, and I'll list them for you briefly, all 6 steps actually have a common denominator of a life insurance policy. The wealthy understand this and the wealthy notice, and that's why they've been using them for many years. But unfortunately, some people have been brainwashed to say, no, and I wouldn't even say brainwashed. I'll just say some people have chosen to go a route of, not necessarily putting the money in that because they don't think it's going to grow fast enough. But what if you could put your money inside an account that's going to grow faster than inflation And oh, by the way, that's your cash flow. And oh, by the way, number two, you have really an emergency fund where you have 3 to 6 months or a year of savings saved up for yourself. So if something was to happen emergency wise, you'll have what you need. You don't have to go and try to borrow from some type of entity. What do you think about that, Brian?
I think, you know what? Look what you're saying. As far as like when I'm listening to you and my mind is like, just like going off like a million miles per hour. Because once again, even as you say that, building a bank. Because once again, like I say, if you don't make no deposit, how are you going to make withdrawal? And for some reason, what I got in my mind is if you don't build now, and you're not going to have nothing when you get older. And saying if you get older and you get sick, you're not able to take care of yourself. Guess what? Nobody, I don't care how much they love you, ain't going to wipe your behind for free. That's so the bottom line is you better be prepared. Yes. Otherwise, you're going to be sitting in that corner, get away from me. I smell like I want to be alone. Nobody going to wipe you behind for free. Family, even right now, these homes, these hospitals, they're not going to do it.
And so when we talk about the bank, we're talking about debt elimination, not debt consolidation. Everybody want to consolidate. That's kind of putting a Band-Aid on it. You're putting it all together in a nice little pool together, and with a smaller interest rate on average. But then you got a fee that you got to pay in order to do that. Why not just eliminate it from the beginning? And when you become the bank, you can actually eliminate your debt. So when you start hearing people say stuff like you can pay off your debt in 7 to 9 years, no matter what the debt is, it could be a student loan, it could be a mortgage, it can be a car. Ideally, most of them are talking about a policy. Let me just tell you before you even go and have a conversation, 9 times out of 10, they talk about a policy, and how it's going to happen for you is that when you become the bank or you own a policy, that's just all it is. Infinite banking, you own a policy. The policy is going to create such a cash value for you because there are some that's performing extremely well. There's different styles of policy, but the one that performs the most in terms of cash value on average and historically over the last 27 years has been the Index Universal Life Policy. Is also known as an IUL. Now, there has been horror stories because not every life insurance broker know how to properly structure them. And not everybody know how to properly fund them. But they're not for the rich, only for the rich, I should say. They're not only for the rich. Therefore, the individual that knows how to have the discipline to fund them and not overloan, not create an overloan or keep taking too many loans out to where it becomes a negative cash value. Once it becomes a negative cash value, then you are going to possibly forfeit the policy, right? You're jeopardizing the actual death benefit. So why do that? So you got to have the discipline to own an IUL, but you don't have to be wealthy to own an IUL, if that makes sense, right? So what do you think about those so far, Brian? Before I go into a little deeper, I wanted to see.
I'm saying right now, hey, I'm open. You got me involved. You're all
right. I know y'all listening intently, so I don't see any comments yet.
Yeah.
But I definitely want you to realize that, when we talk about the 6 steps of financial freedom, you talk about number 1, cash flow. How are you going to create cash flow? You're going to make money while you're sleeping because your policy is going to compound for you, right? Because right now, if you're in debt, it's compounding for you in the wrong way. That's why you can't just pay the minimum balance because what does it mean to compound versus to have simple interest, right? Simple interest is just all it is just the simple interest is going to be the interest on whatever you owe. But compounding means that it's going to be the principal plus the interest, and then it's going to roll the interest on top of that. Okay, so both of those combined. If you have compound interest, then guess what? It's almost impossible to pay it off if you're just going to pay off the minimum. But what if there was a way that you can do compound growth? A life insurance policy can do that. So you can outpace not only inflation by having your money inside of a policy, but you can outpace the compounding of your debt by having your money inside of a policy. So the way that they're doing it is they're taking the cash value as quickly as it's accumulating in there for you, because you're going to stuff as much as you can in there, as much as you can in the beginning of every year of your policy, so that it can make the most amount of money for you instead of putting it in there monthly. Okay, so if your MEC limit, and I explained what that is, and I'll explain what it is again. IRS says that there's something called a modified endowment contract that's created that says this is the limited amount of money that you can put inside any policy before that policy is actually going to MEC out, right? Once it MECs out, it's going to create a red flag that's going to be generated to the IRS that says this is no longer just a policy, it's actually an investment. You don't want that to happen because once it has a MEC limit, then once you meet that MAC limit, or exceed that MAC limit, and you create a red flag to the IRS, and it becomes a taxable event, that policy is always going to be a taxable event. So the important thing is to know is that you want to maximize putting as much money as you can in there. Why? Because the money is going to grow for you tax-free. There's not too many other places you can put your money into that your money's going to grow tax-free besides a Roth account or a 529. Hope that your child goes to college and hope that that works out for you, right? But you can put your money inside of a policy, and no matter whether your child goes to college or not, you're still going to be able to have tax-free income growth. Now, the bottom line with that is that you want to make sure that you understand what your MAC limit is versus what your minimum premium is when it comes to these types of policies, because at the end of the day, you have a lot of flexibility. And if you fall on hard times, your cash value can pay your premium. Is very flexible, very, very flexible type policy. All right. So it'll pay your, it'll actually pay your, I'm losing my train of thought. I apologize. It's going to pay your premium if you actually have, too much. It'll pay your premium if you actually fall on hard time and you're not able to make your payment, basically. So let me say this. The death benefit in an IUL is actually going to be higher than it will be in a whole life policy. So while you may see people oftentimes use a whole life policy, it's going to do somewhere between 3 and 5%. It's going to follow the stock market. But the Index Universal Life policy is not going to follow the stock market or parallel what's happening in the stock market. It's going to parallel what's happening in the S&P 500. Over the last 40 years, it's been 8 years that the S&P 500 has actually been in a negative. And when that happens, people don't mind because they understand that this is why they nicknamed this sleep insurance, because you can rest assured that you're not going to lose any money in your policy, okay? So your policy is going to always grow or stay stagnant if there's a negative value in terms of the market when it comes to the S&P 500. So that's the reason why wealthy people put their money in an IUL, because they say, according to Warren Buffett, never lose money in anything that you have. As much as possible, try not to lose the money. He says rule number 1 or rule number 2 is to not lose money. So if you have your money inside of an Index Universal Life policy, it won't lose any money. So people are literally moving employer plans and all these different types of plans into IULs for that very reason, because they're getting frantic. Because what happened in 2020 when a lot of financial advisors were not answering their phones, and these people were looking for them. They was like, wow, what's going on? My money is dropping and nobody's answering the phone. So literally they were losing like $300,000, $800,000. It was this big scare, and people are still scared. Well, it is what it is. The market is always going to have its swings, but oftentimes people say, well, it'll return, but can you afford to wait for it to return? Number 1. And number 2, will it return in your lifetime?
Wow.
So between those two things, it does become scary. But what if there was a way that you could put your money in something that rest assured, you're not losing a penny in? If anything, it's just going to lock in place, and that's it. That's a bank. Okay, when you put your money inside of a bank, you're not supposed to lose any money unless it's eaten up with fees. We get those, right, with banks. This is your bank. You don't have fees in a policy. You do have insurance, the cost of insurance. Let me be clear. You have the cost of insurance. So that's a cost that you do have. But when I say fees, it's not because of your bank operation that you're running. You're not going to yourself generate other fees, right? Aside from the cost of insurance that you would have. So the goal is to put your money in something that can generate cash for you while you're sleeping, that also going to be able to give you a lot of other benefits that we haven't even begun to talk about, because your bank account is not going to give you a death benefit. Your bank account is not going to give you any type of living benefits, okay? Because most people, they look, as soon as you say insurance and policy, they get turned off, and they're like, nah, I don't care about whoever's living when I die. Guess what? There's a lot of benefits that you probably weren't aware of. Let me tell you about all the benefits that you have. If you become chronically, critically, or terminally ill, or chronically injured, heart attack, cancer, stroke, dementia, Alzheimer's, any type of long-term care plan, you or your aging parents, a nice thing to have in place is what the wealthy have, and that is going to be an Index Universal Life that you could be able to access your death benefit. 80 to 100% of your death benefit you can accelerate the use of while you're living to be able to pay off whatever you want to pay off, rather it's your medical bills or you, right? Because you have these qualifying illnesses, you can now access your death benefit right now, okay? They're not going to tell you where to put your money, but you do have to prove that you do have those types of illnesses, chronic, critical, terminal illness, for your death benefit of 80 to 100% to be accelerated while you're living. Okay. But as far as your cash value, they don't care what you do with it. That's your money. But you will pay about 5% depending on which carrier you're with in terms of a loan. And guess what? The wonderful thing about your bank is when you take your money out as a loan, there's no credit hit. There's no approval process. Oh my gosh. And oh, guess what? You are going to still be compounding the money that you took out. Where did it do that at? While you took the money out as a loan, your money is still compounding in your account. It's still growing, like it's still there. The only thing is you got that 5% interest that's still coming out. So you want to pay it back, but you have all of the freedom and autonomy to be able to access your money, almost liquid money, literally. Only thing you have to do is fill out the form. They send you a check. Easy peasy, 1, 2, 3, right? Like there's no approval process. It is your money. And it is growing compound. And that is why a lot of real estate investors and business owners love these types of accounts, because they just want to take it out and expand their business and grow their business or start another business with the cash value that's already in there. But some people don't know this. So they're like, oh, I don't want a policy. It's just a death benefit. No, you didn't know that you could do all this with it. That's why. So that's why we're here tonight, to really help enlighten you. So when we talk about the 6 steps to financial freedom, number 1, cash value, cash flow. You want cash flow, okay? Number 2, you want to make sure that your money is going to be there when you have some type of an emergency. So you can access 3 to 6 months, a year, however much you need. It's there. It's an emergency fund. You don't have to go to the payday loan. Number 3, you absolutely want to make sure that you are paying off your debt. You want to outpace inflation with the growth. You want to outpace your debt and its growth. Okay. Basically, think of it as a cash balance transfer. You think about, have a credit card and you do credit card transfer. A lot of y'all know how to do that. Okay. You got one that you owe money on and you got the zero balance. That's 0% interest. There's no interest that you're paying on it. You transfer the one from the one credit card to think about your policy like that, but on steroids, because you're actually making money on the money that you borrow. It don't get no better than that, right? So number 1, let's say it again, cash flow. You are going to have money that you can access, just like a bank, okay? Number 2, you want to have your emergency fund just like you would have inside your bank. But instead of your money growing at 0.01%, your money is going to be growing on average. I can't guarantee based on past performance, because past performance doesn't equal future performance. And we don't give no guarantees, okay? And this is no financial advice, by the way. Let me put that out there. This is not to be construed with financial advice, because everybody's situation is different. But at the end of the day, historically, IULs have been outperforming the other types of policies. It is known as the cash accumulating cow of the policies. When you look at a whole life policy, you're going to get less death benefit for the same amount of premium, but it's going to be a guaranteed death benefit. Unlike the IUL, if you don't have the discipline and you take out too many loans, you will forfeit your death benefit, okay? If it's not structured properly by your life insurance broker, you're going to be in a world of trouble, okay? If you don't fund it properly, you're going to be in a world of trouble. But it's going to grow faster than any other type out there for the most part, okay? On average, anywhere between 8 and 20-something%, depending on which carrier you're with, okay? So IULs is the way to go if you're looking to really want performance for your money inside of a policy. It is the way that the wealthy are going, okay? Whole life, a little more, conservative, 3 to 5%, right below inflation, but still more than a bank, and a guaranteed death benefit. That is the difference, all right? So just understand that you can be the bank and you can use whatever type of bank you want, whole life or IUL. The average person out here has a whole life for their infinite bank, because that's the way it was structured when Nelson Nash actually put this concept together. In fact, I was told that they couldn't even do anything with an IUL or any other type, but that's the way the contract was written. So from a fiduciary perspective, it kind of limited, kind of like a captive agent. When you talk to life insurance people, if they work for something like, say, New York Life or State Farm, they're captive agents. They can only help you with products that they provide, versus a life insurance broker that can shop 80 to 100 something different carriers and get you the best product for what it is that you're trying to do. All right. So when you think about the infinite banking, most people only can do whole life. They don't even know how to structure the IUL, unfortunately. It is very sophisticated in how you do that. You have to have great training on how to do that. But it is a wonderful product if you have the right insurance broker to help you put that thing together the right way. It has to be properly structured, or it can be your greatest nightmare. So it is very, like I said, much going to outperform the other ones. You just have to fund it properly, and it has to be properly structured. And so those are the three that I really want. I don't want to like give you too much to digest. There's three more steps, as you well know, because we talked about 6 steps. You can go back to listen to some of the other ones, but I don't want to stuff too much into you tonight. When we think about a bank, think about you having the autonomy to put in money, take money out whenever you want. You can make your deposits, your withdrawals. Again, like he said, if you don't make a deposit, how are you going to make a withdrawal? So you want to stuff as much as you can. We always try to say max fund your policy when there's an IUL as much as possible, and especially in the first few years of the policy. You want to pay up to the MEC limit. Like I literally did my MEC limit payment today myself. So I'm not just telling you what to do. I'm doing it myself. I wrote my check. I actually gave them my account number today to pay out my MEC limit for the year. Everybody's, of course, year is whenever you start your policy. And every year you can put up. Why would you want to put in that amount of money inside of a policy in the beginning? Because you want to make sure that your money is growing tax-free, number one. And number two, you want it to grow as fast as possible by putting as much as you can in there, like the wealthy do, up to the limit. And the limit is the MEC limit. So, kind of fund it as much as you can up to the MEC limit. That way you don't have no issues later on when the cost of insurance is increasing the older you get. When you get to be around 70 and all those time, the cost of insurance starts to get real expensive. But if you max fund your policy in the beginning years when you're younger, all that cash value that's building up will help to absorb your cost of insurance in your later years. If you live to be 99, 110, policies go to 120 age at this time. But if you have a long life, like my uncle, 106 years old, you want to make sure that when you were younger, that you max funded as much as possible. So as you get older, it'll start paying for that cost of insurance that's going to go higher the older you become. So I definitely want to see what other questions are out there. We've been talking for 22 minutes. So we don't want to be long. We just want to be strong. So let me pause and see what questions may be out here. I do have the same number. It's on the screen that Brian has, 678-736-6496. And if you text BTFRA, that's going to be the fastest way to get in contact with me, literally. Any other way, you can still make contact with me. You can go to Shateka.com, things of that nature. But either way, he gets priority. So let's see what else is on here. Thank you, Blanks Brannick. All right. Yeah, I saw that. I saw that you have your, okay. Thank you, King Kong. All right, so.
Is Malik Campbell?
What happened?
You see Malik Campbell, Shateka, have to give you a call.
Yeah, that was the first one. That's the first one I saw. Yeah. I'm going backwards. I'm reading from the bottom up. Yep.
You know what? Even as I'm listening to you, and a lot of times, like to me, like I'm listening to you, and for several years now, and even right now, the more and more I listen to you, I'm kind of in awe. And what I mean by that is this: like here it is, like how do you become so versed, so knowledgeable, about these things? Like I understand knowledge is power. So it's like right now was something out there, like a magnet that had to attract you, like draw you in. Because once again, you mastered this stuff. Like I'm listening to you, like wow. And you educated me, helped me with different things and what I've been working on a few things now. And I love that. But the difference is like, to me, I know you're a Christian. I know you're very passionate, but it's like right now it's like, help me. Like, how do you become, so great at this?
Well, I think it's more of the understanding that I feel like this is where my life calling is at this point, right? Like I wanted to understand how I could help our people because I see so many people in poverty, and I didn't understand why going to church, why people were so broke all the time, and I didn't have that problem, and I didn't understand it because I grew up in poverty, but that's not how I turned out. And I knew that it was a mindset, but I knew I didn't know everything there was to know about finances either. So I couldn't really teach anybody how to go from being broke besides saying I'm just going to pay my tithes. It's got to be more to it than that, right? Like God helps those who help themselves. Like, so, but at the end of the day, I didn't understand why that mindset was there. Why they always so broke? And then I started doing business with them, and I can understand why they broke, because a lot of them don't do business the right way. They just don't. They're not ethical. The character isn't there. The character's in the church, but not necessarily in how they do business. So I said, well, I still got to teach these people like as much as I can, right? So I didn't know everything that I needed to know because that wasn't my background. My background, as you well know, was an Army officer, corporate executive, what #1 retail, a big box retailer in the world, #1 online retailer in the world is where I was. But now I'm like, I got to move into a space of, being a certified professional coach. And when I did that, people couldn't afford the services. I was like, oh my gosh, it's not even a lot. So, and how can I help you? But at the end of the day, I want to help you, but I can't run a nonprofit. I got to make something because I got to eat still. I'm not like fully retired. So I put on this event, like I mentioned once before, at generationalwealthsymposium.com. When I put on that event, the lady who I was so impressed with, I saw her in DC at a women's conference when I was there. And I was like, I got to speak to this lady. Like, she knows money. She's talking about $3 for every $3. Every dollar you put in, we can match you with $3. Like, what's she talking about? And she's talking about premium bank financing, how the banks will actually finance your retirement. Like you have a mortgage and they finance your mortgage, they can finance your retirement. And people didn't understand it. And, it's like some of the stuff she was saying was over my head and I didn't really understand. And I got an MBA, I'm like, what is going on? Now, I learned about corporate finance, but they don't really talk a whole lot about personal finance. So I still was a little green when it came to that. And I was curious because, I was a real estate investor. And I said, if I can figure out real estate investing and get all these properties, certainly I can find out more about finances and how money works. I wanted to know how money works and why is the wealthy getting wealthier and why is there a wealth gap? And, how do we change the trajectory of the people? My heart really was about generational wealth. And back in 2019, the beginning, like about March, I started doing this little show about, generational wealth and with the limited knowledge. But when I started learning more and more about the industry, as I became licensed and things of that nature, I was like, wow. When I was going for my license, I just kept learning so many incredible things. I was like, people need to know this. They don't teach this in school. Nobody taught me this growing up at the kitchen table. Like, who teaches this in their home, right? But I know that other ethnicities, they teach their children this. They slap a policy on their children at 15 days old, but they look at their children as assets and not liabilities. And they grow their wealth through their children because they can only grow it so much by themselves. Right? You can only have so much of a policy on yourself. So when you have a child, it's like, oh, there's another opportunity to stash more money. So they was doing that type of thing. And our mindsets was just totally different. Like, oh my gosh, I got a child, I got to spend all this money. But they was literally creating more and more wealth the more children they had, basically, right? So just a different mindset that I was able to learn, and just seeing how money works by getting my license, it made me more and more hungry. See, like the more I learn, the hungrier I get. If that makes sense. Like I'm hungering for more and more knowledge. But if you want to start somewhere and you just want to say, well, how do I get to a tax bracket of 0? Because we know that the #1 debt is really taxes. It's not really your house or, your car. Most people think that because that's what they can see. But it's their taxes if they can really deep dive into that. Because if I can get you to keep more money, I can get you to leverage that money and make more money for you while you're sleeping. And now you have a nice little nest egg of money, right? But most people don't look at taxes the way they need to. And, the biggest thing what I learned was that, you got to keep more money, but you got to leverage the money while you're sleeping. And how do you do that? You figure out what's going on with the tax code, 475 deductions, as we talked about. People don't really understand it. There's 475 tax codes. 475 deductions for taxes. And the tax code is written for the business owner. It's not written for the W-2 employer. That's why the rich get richer, because they understand that. They know how to do that. They know how to do these exemptions very well. And so look at how what their behaviors are, and how they do money. And assets over liabilities. All our lives, look, when you came out of poverty and you finally made a little bit of money, you just was trying to make money. So people was like making 6 figures and still broke, 7 figures and still broke, right? Because as much money as they make, they're going to spend. How do you live below your means and stop being flashy, reroute that money, so that your money can make money for you while you sleep. And don't you fall asleep on me, because that's what you look like you're doing. And I'm going to be quiet. I'm waiting on you.
You waiting on me? No, I'm listening to you. No,
I'm gonna let you wake up and talk. How about that?
You gonna let me wake up and talk? I'm woke. Hey, look, I'm
it's
woke.
Your show.
I'm woke. It is my show. If someone dropped $15,000 on your lap, how will you invest it?
That's a good question. How would you invest it? It depends on the individual. What's your risk tolerance? What do you want to see come out of it? Are you want to do fast acceleration, slow acceleration? How do you invest it? Depends on you as an individual. Everybody has different investing styles. If you love doing real estate, then you might want to do something with $15,000. You want to start something with a property. If you like trading, maybe you take 50% of that and trade. If you like stocks, maybe you put half of it in stocks. It's up to you and what your risk tolerance is and what's your ability to be able to make your money grow for you. Okay. So if you don't know what to do with your money, then you need to have a money manager. Okay. And that's where a financial advisor would come in. You basically pay them all this money to be able to take your $15,000 to help you grow it and hope that it grows. They can't give you no guarantees. I'm going to tell you what Shateka would do. If it was my $15,000, I would certainly pay up to the MEC limit in one of my policies, because I have several. Every policy has its own purpose. All right. So why would I put it in the policy and not in anything else? Because there's a lot of volatility going on in the market, and I know what my policy going to do for me, and I know what an annuity could do for me. And if I was old enough, certain age groups, I can put my money inside of an annuity, and it's going to do 200% participation rate on certain products that's out there right now. That's like if the market is 10%, it's automatically going to do how much? If it's 200%, how much is it going to do if the market is making 10%? So I want to make sure that my money is going to be in something that's not going to lose any money to the market. So my $15,000 would go in something like an annuity or an index universal life. See, when I say something like, I'm talking about index products. Index, anything that has an index universal life policy, index annuity, those products you cannot lose money in. The only money that you're going to lose is a minimal fees that come out of them, right? Which is usually 30 to 50% less than any other type of financial vehicle that's out there in terms of fees. And you don't have to pay any capital gains taxes on the index universal life policy. Now, when it comes to the index annuity, depending on how long you've had it in there, it'll determine how much you're going to end up having to pay for any types of taxes. So you can turn your annuity into a Roth, and it can become a tax-free account. But ideally, they're going to be taxed just like anything else, right? So the index universal life is more attractive because it's tax-free from the beginning on anything that you put in there, on any growth that's coming out. So if you're looking for that, if that's important to you to minimize your tax liability, then that's the route to go. For me, it's important because I don't have children. I'm not married. So I pay the most taxes. I pay a lot of taxes, and I don't like paying taxes. So I want my money in something that's going to be tax-free. So that's important to me. Now, you can say, I would rather just make more money and then worry about taxes later. We know that taxes are going to go up in the future. We know that taxes are, listen, in the past, they've been as high as 94%. We don't know how high it's going to go. We don't know where it's going to go, but we do expect taxes to go up. So the goal is to put your money in something that you're not going to end up paying taxes on in the future when it's going to be higher. And that's the reason why I would primarily position my money inside some type of an index account where I know, like Warren Buffett says, that my money is never going to lose money. My investment is not going to lose any money. I know that, right? You can guess and hope on some of these other products that are out of here, NFTs, cryptocurrency, stocks, bonds, all these other different things. These things, some of them things grow real slow, some of them grow fast. But as fast as they grow, is as fast as you're going to lose the money in them. So if your risk tolerance is super high, maybe you don't mind. Like I have a high risk tolerance in certain aspects. Let me be clear. For my retirement account, I'm conservative. For my play, let me grow this money real quick, flip this money account, I'm doing crypto. I used to do real estate. I don't do that anymore. I used to flip properties, multi property landlord. That's slow money, but it's still money. It's good. You know, if you buy low and sell high over the years, I've, 300x my return on those types of accounts. You got to be able to wait it out. You have to have patience and things of that nature. So if you have that much patience for something to pay capital gains on, you might as well just put it inside something like a policy. At the end of the day, when you look at the numbers, I looked at the numbers over and over and over, and an annuity with 200% gain every year, if you're at least what I believe is like 59, you don't have to worry about that. It's that money is going to really grow inside those types of accounts. But it's not for the younger person because they don't have that 200% participation rate for the younger person. Also, if it's only $15,000, so I couldn't put it inside something that's going to be like a premium bank financing to catch my money up. Because that's what premium bank finance is about. It catches you up in retirement so that you can be able to make money faster because you waited too long to start your retirement account. But you got to be able to fund that five figures at minimum $21,000 a year times 5 years. And then over time, you will see like literally that it's going to be a lot of money. But that's a loan. And then you pay the bank back, and then you have all this big pot of money because you partner with the bank to grow your retirement account. But you have to have a certain income for that and net worth and all that. That's why a lot of individuals don't know anything about it because it's only really something that's been exposed to the wealthy. So $15,000, again, if I had that, that's what I would do with my $15,000. But there's a lot of other options out there that you can use, like, the reason why, I don't know if you are employed or not employed. There's a lot of factors I don't even know about you to say where you should put your $15,000. Because if you're funding your 401k, you might start raising your money in your 401k because that's what you want to do. I don't necessarily care for 401ks for a lot of reasons because you end up paying your taxes later on, right? Instead of paying it now, and it doesn't come with all the bells and whistles that an IUL comes with. Right. Because when you leave your corporation and all your employer plans that you have, TSP, IRA, all these 401k, 403b, when you leave those employers, you don't have a death benefit. Most 9 times out of 10, you have a term policy, and that term policy you're going to have to renew at your oldest age, right? Whenever you retire, which is going to be a higher premium if you decide you want to go the term route, because we know that 98% of people will outlive their term. So there's only a 2% payout on term. There's only a 2% payout. And so it's really more of a donation to the carriers. And that's why insurance is a bigger business than banks. They know how to make money, right? Final expense, you're going to pay 400% of whatever you put into it. On 9 times, it's not a lot of money. But when you think about all the years you've been paying over that final expense policy, for a couple on average, they're going to get a $10,000 policy for $40,000 in payments over their life. And that's not even going to cover the burial. When they could have just paid for the burial expense up front, it would have been 50% less, and just been done with it. But we don't know it. We don't know those numbers. We just want to pay into something because we don't know. But time out for paying, a donation to the carriers. Put money in something that's going to make money for you while you sleep. That's going to help you with a death benefit, with living benefits, with number one, protection. That's protection against what? Lawsuits. Protection against if you end up going through a lawsuit with the creditors, they're coming for your money. You are going through a divorce, they're coming for your money. None of this money is noticeable in the courts. It's your policy. So this is not accounted for. But if you have an employer plan, that money is accounted for in any type of lawsuit. So there's no protection. There's no protection from market volatility. When the market crash, your 401 crash. Do you have time to rebound in your retirement account that you have? So that's why $15,000 is going to be in a safe haven somewhere where I know my money is not going to be lost because it's only $15,000. I don't have time to lose it.
Somebody G put, thanks for the game, sis. Also, everyone control your desire. Everything you purchase externally won't make you happy. That's deep.
Yeah. So it's a lot of ways you can definitely invest $15,000 when you think about it. I'm just a little like knowing what I know. I want my money to grow for me, and I want my money to give me some benefits at the end of the day. And that's why I like the IUL primarily, but it's all about your preference. Like if you like risk, you might want to do cryptocurrency because you can make a whole lot of money in cryptocurrency, but you can lose a whole lot of money in cryptocurrency. It's up to your risk tolerance. I can't stress that enough. Some people like the VUL policy, the variable universal life, because it makes a lot of money. But the same way it make a lot of money, it can lose a lot of money.
Mm-hmm.
Yeah. So if you have that high risk, go for it. But yeah, that's where I'm at on it. But my retirement account, I don't want to play with that. But I do have my play accounts, and I love crypto for my play account because yes, you can make money in crypto all day long. You can trade it and make money when the crypto go down if you understand trend analysis. Okay, if you understand the market and how to read the market, and I do. I knew I know almost every time Bitcoin is going to drop. You can actually trade the Bitcoin going down and make money off of it versus holding your money in Bitcoin and just watching it go down. You can't touch it. And just doing what they call Lord, it just escaped my mind. But either way, when you put a certain amount of money over time, the same amount of money every time, I'm trying to think of the word, start to see, but it's not coming to me. It's too late and I'm tired. But either way, make sure that you do your due diligence when it comes to whatever it is that you're investing your money into. If you're starting to get into stocks, you need to know what's going on with the company. You need to know, what kind of decisions are they making before you start doing those types of stocks and things of that nature. There's all types of ETFs out here that people try to get into. NFTs, people trying to get into. That's the newest buzzword out here now is NFTs, non-fungible tokens, right? So for artists and people of that nature, a lot of people don't understand it. But what's going on with the metaverse and all this other stuff that's going on out here. We had a brief conversation about that before. But this, if you don't understand it, I would say, consult with a professional in that space because people have various expertise. And I'll just be honest, my expertise is primarily going to be inside some type of a life insurance product. That's what my expertise is primarily going to be. Although I have dabbled in stocks and did well with stocks. I've dabbled in real estate and did well with real estate. But I love educating people on what the policies can do for them because I know that's what's differentiating a lot of African Americans away from in comparison to other groups that are out there. So just understand that that's how they're building their wealth primarily. It's so big of an industry that we have to be trained on anti-money laundering because that's where people hide their money at is in policies. So it's it's bigger than banks. Like banks have policies. I mean, they put their money in, and the banks put their money inside of an insurance policy because they want to make money for them. That's how secure. When you start talking about FDIC, and you start talking about, I don't know what the bank's going to do. Put your money in a policy, and you cannot go wrong. And then other people say gold and all this other stuff. That's not my thing. I don't really care for it, but some people love gold. So it's all about your preference, huh?
Yeah, precious metal.
Yeah, precious metal. Some people love it. That's not my thing. But everybody has their little area that they like. But I'm not saying it is a bad thing. I'm just saying that's not what I would like to put my money into personally. And why? Because it's to be slow money, very, very slow money too. But it's supposed to be secure, but it's slow. So I like numbers, and I like the numbers that I see on IULs. I like the numbers I see on annuities. I like creating an income. I like the fact of creating my own income, like a Social Security in the future by just putting some money in. It don't even have to be a lump sum. It could be as little as $5,000. You can literally put your $15,000 in an annuity and let it just sit and let it grow big, grow big, grow big. It'll never go down. It'll only grow. And you can have an income stream that you can turn on later on in life off of $15,000. So, and once you turn that income on, like Social Security, you have it for the rest of your life. So there's a lot of things that you can do. But yeah, we were just talking about becoming the bank tonight, just to do a quick recap because we had 45 minutes. The quick recap is really that. I mean, like, the same things that you can do in a bank, you can do that and more. You can do a bank on steroids whenever you have your own index universal life policy, because you can actually, like I said, take the money out as a loan. And guess what? If you don't pay that money back before you die, it just subtracts from your death benefit. So if you take a $50,000 loan out, it's still going to compound and grow in cash value. Okay. But people, have to get approved for the loan. They got to go through the whole loan process. They hope that the bank give them the loan. It's going to be a hit on their credit, all this type of stuff. But if you would just save your own money inside your own account, you can create your own bank and look at all of the different benefits that you have. On top of that, you got a death benefit, you got medical benefits, you got protection of income in 2 ways: divorce, creditors, market volatility. You got all this protection of your money. You talk about, I don't trust the bank, then I can give you what you can trust, and that's protection of your income. You need that. And oh, by the way, we didn't even get to other things such as a trust. We didn't even talk about that tonight at all, and how you can create a whole different tax code for yourself. Own a lot, but not on paper. You own nothing on paper, because the trust owns everything. You just control everything. So your taxes are going to be way different, right? So that's what the wealthy is doing. Those are the strategies that they use so they don't pay taxes. So that's the truth. And again, The Power of Zero, written by David McKnight, will teach you a lot about money and how money works and how to get to a tax bracket of zero. Just read that book or listen to it if you do Audible like me. The Power of Zero, written by David McKnight. I tell people that all the time. The Power of Zero, written by David McKnight. And it'll tell you a lot about money and how, the rich play the game when it comes to getting to a tax bracket of zero, so that they can keep more money, so that they can take that money now and leverage it and make more money. They employ their money. They don't employ them bodies themselves. They don't go work and trade time for money. They let their money work for them. They live off interest and things of that nature. When you can get to a place of living off the interest of your money, you've done well.
And we're going to take this one question and say, is establishing a relationship with a black bank to improve your chance for loan approval or a real thing?
I was actually thinking about that. And the reason why I was thinking about that, because I do see some things I don't like about the insurance industry. And I really was furious this week. I had a moment a couple of days ago. Because truth be told, I do see where, I feel like there's some redlining in the industry. If I had to write a book, that would probably be one of my books. I don't like it. But at the end of the day, I always help our people understand how to properly even go about that whole process. But getting a loan from a black bank is something I've never really even looked at or even heard anything about. Do they have them? Of course they do, but I don't really hear people talking about that. So I couldn't tell you about either way, because most people that I'm dealing with, they pretty much they kind of set. They kind of set when it comes to finances. But I have never myself personally never tried with a bank. I don't know anybody that actually tried to, with an African American bank. I only knew of the ones when I lived in Atlanta. There was a African American bank, and I never did any business with them, to be honest. At the time, I wasn't really into banks anyway, but I was mostly into real estate. But when it comes to banks, I often like to say things like, online banks are good for if you're trying to have something in terms of your money making money for you. They perform better than a regular bank that you walk inside, because they don't have the overhead costs of having a fixed facility for you to go inside of if you have to do banking. But again, some people say, well, I can't get an IUL. I can't get a life insurance policy. The next best thing is going to be an annuity. You just can't touch your money. You're going to have to let it sit there until it's annuitized. But it still can give you terminal illness type benefits as well. If you have terminal illness, you can start accelerating your benefits in less than 2 years, things of that nature. But when it comes to having a bank, an African American bank that you're going to use, I don't necessarily know any players in that space or anybody that's actually doing that. So I can't really speak to that. It was good. Okay, good, Jen. That's good. Good to know that you had a good experience. I think that we need to take out the whole approval for loan concern by just creating our own bank. Listen, you can start in a regular bank, having the discipline if you have concerns there, but you definitely want to start your own bank as much as you can, because of all the reasons that we talked about. Then you have to worry about the approval. Because honestly, I often tell people, listen, I know you got $5 a day that you can put away in your own bank. $150 a month. People eat that in 1 week, one setting. Some people wear that on their feet. $150. So I know you can create your own bank, but just $150 a month minimum. Right? So when that money can start making you, 10% on average to 20% in any time, or if you decide you wanted to do a lump sum, or put it in an annuity, start making payments on annuity, then you can do that too. But at the end of the day, you want to make sure that you have the ability to create your own bank, so that the driving position is the place to be. This the owner that's the one that's going to win. It's never the people that's below that's going to win as much as the owner. So that's why you want to own your own bank. I'm just making a note for myself. Any other questions?
Do you have tips on how to find a good broker that can structure?
Yeah, I got a good tip. Me. No, just playing. All right, but no, I'm actually a life insurance broker. So I know how to do that. I know other life insurance brokers as well. If you rather work with a male, I know some male life insurance brokers also. But how to find a good broker? Maybe you Google, or maybe you do your research in terms of, how they did business in the past. Maybe you might want to know how long they've been in the industry, if that is important to you. Who are they working with? What kind of companies do they work with? How the companies performing that they work with. Because all insurance carriers are not the same. They are not the same. Y'all getting these stuff in the mail and these commercials. All insurance carriers are not the same. You want to know that this insurance carrier can pay your claim out in a time of a pandemic. You want to do a Better Business Bureau to kind of see what kind of complaints is against them. What is their rating? And I know that some of that's skewed, but still, that's a good place to start. What are the reviews saying about these carriers? There are some horror stories out here when they start talking about different types of carriers. You want them to have the financial strength. That's the key word, the financial strength to be able to pay, for claims. They need to be like an A rating. I wouldn't deal with no insurance carrier that's not an A rating. Okay. Number one. Okay. So you start looking at those types of what is their Comdex score? Their Moody and Best score, all the different scores that's out there. When it comes to insurance carriers, you want to make sure that Standard & Poor, you want to know what their scores are and if they have good scores, and before you even deal with them. And if your carrier is getting you inside some type of carrier, if your insurance broker is getting you into some type of policy with a carrier that's like poorly rated, question them, push back on them about that. You want to ask a lot of questions. I had a young lady tonight, my Lord, she asked me the most questions I've ever been asked. I'm not even lying. Jamaican young lady, sharp. She was sharp. I said, I need you on my team. Could you come work with me? I only need 3 people this year to work with. And I want you to do them. And she's an RN nurse. But yeah, you want to ask them a lot of questions, keep them on their toes, I answered all of her questions but one. I'm not going to tell you what the question is, but I'm going to find the answer and I'm going to get back to her. I actually asked the question, but the way it was broken down to me, I still don't understand it. So I got to ask the question again. But it was just one question. But yeah, she asked a lot of questions. I'm talking about everything. But either way, ask them a lot of questions and make sure that you just you have to know, like them, and trust them, and know that they're not just in it for the money. IULs is not for everybody. I'm going to be the first person to tell you. And if I don't think you can afford one, you will know. I am going to be direct with you. You don't need an IUL. You need a whole life policy, especially if you're somebody that your bank account have negative balance and things of that nature. You don't need an IUL. That is not for you. Because what we don't want is a chargeback. And what we don't want is for you to lapse your policy. Okay, that's a lose-lose situation. So the life insurance broker, they need to be putting you inside something that you're comfortable. Here's how you know if you got a good one too. if they just start telling you, you need this, you need that, this is what you need to do, and they don't even know your financial situation, you don't even do a needs analysis for you to be able to list out all your assets and all your liabilities. In other words, all your debt, and then where you have all your money. You got to be comfortable with it, but you got to list that stuff out so that they can know and then feel comfortable about what it is that you can afford. The whole goal is to understand what your budget is, okay? If they can't even get to a budget and they're already trying to sell you something, you already know that what they're about. So that's one way to definitely see, because they don't know what you have. So how are they going to tell you that this is a good product for you? It might not be a good fit. Whole life is great for a lot of people. Even though they don't like the way it grows its money, it's the best thing for most people because they don't have the discipline to be able to make sure that they pay the loan back when they take a loan out and things of that nature. And so when you get older and around 60, 70, 80, and you didn't pay those loans back, and now your cost of insurance is super, super high, okay? And now you upside down on your policy, and now you're about to lapse your policy, and nobody told you. So they should be, here's how you, when you interview for your life insurance broker, they need to be able to educate you on everything. When you start telling them your situation and they can't like educate you on, oh, this is what you want, then this might work for you, because they should be giving you some options, not like steering you anywhere. Like I told a young lady, like, because I do a lot of teaching on some different platforms, and everybody liked the IUL when I start talking about it, but that's not for everybody. It's ideal for the younger person up to about 45, 70, 47, 50, depending on how much money you can put on in your later years. If you can catch up in your later years funding it properly, then you are right. But usually it's better for a younger person. But at the end of the day, they should be understanding all of the negatives and the pros and the cons, and educating you on your decision. It's about suitability and then for your best interest. If it's in your best interest to have whatever product it is, that it is not necessarily for their pockets. You know what I mean? Like, I know, Brian, that a lot of your followers are New York, but I promise you, we don't make no money out of New York. Okay. But we work with New York people. But if I was just in this for the money, I wouldn't even want no New York people, because listen, it's 50% pay for life insurance brokers in New York. And that's why nobody wants to work with anybody in New York. But at the end of the day, we're not in it for the money. We just in it to help people, educate you, make sure you get your generational wealth, all that good stuff. Yeah. And then New York is so hard. Everything is so hard there. Golly. You got to listen. This is a lot. But we want to make sure that we have everything on file for you New Yorkers, so that y'all don't come for us. Your state don't come for us. We want to make sure that you're taken great care of. We understand they want to make sure that New Yorkers are taken great care of, and that we're not selling you whatever they want. Yeah, we're going to make sure you're all right. But let's see what other questions out there. 10% interest as a new business owner at the time. What is this talking about? What is it saying? Do you have tips on how to find a good broker? What's the difference between annuity and... Let me see if I still answer that question though. How to find a good broker. I guess it depends on, when you say find a good broker, what that really means, honestly. What is it that you're looking for them to be good at? Just be somebody that's have integrity, have good character, good education, good performance. Right now, I'm the number one in my company. Actually, I'm lying. I just looked tonight, Brian, and somebody just took my number one spot. But she makes, I'm not gonna say what she makes. That's another whole story. Yeah. But at the end of the day, how
long has she been doing it?
How long has she been doing it? Mm-hmm. She's been doing it probably like 10 years.
Okay, so
yeah,
difference right now is like, look how long you've been doing it, and yet, and still, regardless of what, you still there. You took that. That's the difference, you know.
Yeah. The girl is good.
Okay.
Asian young lady, her and her husband, they're a team. So the monies that they make is the team money. I'm a solo single person money. Yeah. But no, they do, and they're from California, so they're gonna make money over there. Them people over in California, they have money. But at the end of the day, I'm just trying to see how I can answer your question better, because I don't feel like I answered it to the best of my ability, or at least to my liking, I should say. I'll think about it more. How do you find a good insurance broker? I'm gonna have to think about it a little bit more. Sorry. Yes, you can have annuity and insurance policy. You can have, somebody told me the other day they had 15 insurance policies.
15?
Yeah, you can have as many as you want, as long as you can fund them. policies in the older years, it depends on if the first 2 years of them passing away is important to you, and what your budget is. If you're trying to be like some people, they don't want to spend a whole lot of money because your parents are already older. I don't necessarily like the guaranteed universal life, but it's like a term policy that's guaranteed no matter what their health is. There's no cash value built up in it. So it's not an IUL on your parents. Like if something happened, your parent have to be, say they got dementia, you can't put them in a home, or you can't afford it. But if you had a death benefit on them with a medical, benefit, living benefits attached to it, that can actually be, turned on to be able to pay off those, nursing home fees and things of that nature. But with a GUL, I mean, it's guaranteed, and it's like a term because it's very cheap, so to speak, because they're older. But it's about what is it that you're trying to do. I can't do like a full consultation, but I can tell you that based on your budget and what you can afford will determine what type policies that you can get. You can get the Mercedes-Benz for your parents, or you can get the hoopty for your parents, in terms of what's the coverage is going to look like. But there's something for every budget out there. We can create whatever you need in every budget. I work, like I told the lady tonight, I had a $50,000 policy. I've had, $800,000 annuity. So I can work with anybody that, is willing to change the trajectory of their financial future. And if you're hungry to do that, that's where my passion come in at. Like, you ready? Let's go. Let's do this. Let's get you where you need to be. Yeah. So let's see. What's a good life insurance policy? Golden years. I like, again, GUL might be good, or you can get a high IUL if you can fund it, because it's going to be more expensive because they're older. Or you can do a whole life. You can do, if you want, if cash value is not important for you, get the term. Get the term. It's going to be the least expensive. You're just not going to have cash value built up. And yeah, you can get the term. The terms usually be about 30 years. If they're already in the golden years, then 30 years is not going to, it'll work for them more so. But it's just going to be expensive still because they're in their golden years. Peace to you, Sean. I can help with strategic planning for investing. Credit advising, I don't necessarily do, but I can. We can have a conversation about your credit. I do have a team of people around me that do credit. I actually have I probably have 7 courses on credit. I don't even really do credit advising, but I do have 7 courses on credit. That's how much I'm into credit. I think it's a wonderful thing to have because you can leverage credit to be able to make money for you. All right. So people don't use credit the right way. They use credit for liabilities, but you can get credit and literally buy your properties with credit. You know what I'm saying? You can have your credit and fund your business. You can have credit and fund a lot of wonderful things that's going to make money for you. If your credit card is being used for liabilities and not for assets, you're using that thing totally wrong. And that's the difference between the wealthy and the poor. The poor is using it for liabilities. The wealthy is using it to fund businesses. And they grow. Listen, they want to get into more and more debt so they can grow their money more and more with credit. So that's how they use credit. It's how you look at how do you do money. It's a totally different mind frame. People are taking that credit and they making that credit make money for them. First of all, everything gets paid with the credit card so they can get all of the rewards points to make more money. So they're literally making more money by paying off their bills and credit all the time. So it's just it's a whole course around it. But either way, there's no cash value in term, but some people that's all they can afford. I don't like to knock it too bad and you don't know better, you don't do better, and that's the best you can do with your budget. The goal is to have some type of coverage, right? Like, so we don't want to beat people up. Listen, I still got a term. My term don't run up until I'm 95 years old. I got a term. I got a whole life. I got a index universal life. I know that I'm probably going to live to 110. I don't care. I'm going to just still pay till I'm 95. And if I beat the 95-year-old term, then I beat it. So yeah, I got 3 right now. I actually had 4. I changed one of them up. Either way. Hi from Atlanta, Benjamin. Yeah, definitely, guys, go back and listen to the replay. It's so many wonderful things you can do to become the bank of your money. We just on here like real casual, laid back. This is not a formal setting. We just want to have a conversation, have some dialogue, and just kind of share. How many weeks has it been now, Brian, that we've been on here doing this? About what, 7, 8?
Right now, about 4. It's probably the 5th one.
Oh, really? I thought it was more than that. Okay.
I'm saying, not talking about before. We had done a lot more before we stopped. But I'm saying, as far as like, leaving last year, going into this year, I say this should be like the 4th one
for this year.
For this,
okay.
From 1 from last year and 3 so far for this 3. You know what? This might be the 4th one for this year.
Okay, so yeah, definitely like go back and try to look at some of the stuff that we've been talking about. But we have good conversations every Wednesday around this time, around 8 p.m. Eastern Standard Time. On Wednesdays, we try to get on. Some Wednesdays we can't make it because, competing priorities. But our goal is to get on here at 8 p.m. on every Wednesday as much as possible. And we've been pretty consistent, like he said, for the last four Wednesdays in a row. We said we're going to be stronger this year and try to be more consistent and have conversations with you all, answer your questions. I don't know everything, and I'm going to be honest about what I don't know because my integrity is everything to me. And I wish that I knew everything, but I don't. But I'll listen. If you want to text me something that you really needed to know, I'll go look it up for you and find it out for you. But if I don't know it, I don't know it. Because this is not my background, but I've done very well since I've been in this industry. I've done very well because I've been surrounded by over 100 years of experience. And if I have a question, I'm going to them and I'm going to find out, and I'm going to take the best care of my clients that I can. Because I really want to make sure that they're taken good care of. And if I see redlining, I'm like a pit bull. I mean, I had an out-of-body experience this week, the first time in a long time, because somebody had a felony and it's been like 52 days, and we playing around with a doctor that's saying that they don't have the records. Are you kidding me? So so they don't want to these good insurance carriers, they look at certain people as, oh, I'm gonna have to pay a death benefit on them. I don't want them, and I don't want to have to do this policy. And I know that's what it is. And I always call it out. I can talk a little stronger now because I got a little experience, and I'm kind of like up there. But at the end of the day, and I'm not bragging, I'm just saying that I've done well in this industry and the short amount of time that I've been doing it. And listen, I'm just gonna be honest, it hasn't been a long time that I've been doing this, but people have been happy. Our clients are happy. They're seeing the returns. They know that their money is not going anywhere. They know that they feel like they can sleep at night. I can sleep at night. I'm happy that I know this information. Listen, I'm a product of the product. I own 2 of my policies from when I started this industry. So I believe in these products, and it is what it is, I see a new comment drop down here, but we really just want to help people. Educate you. And if you feel like, you want to go somewhere and find out more information, research, IUL ASAP, the lady that actually brought me into this industry, her name is Shirley Liu, Luu. She's the one that I told you that spoke at my conference. So if you went to generationalwealthsymposium.com back in 2019, when she started talking all this stuff about money, when I saw her in DC, I was like, I needed to be with her. I needed to find out what, I need to learn from her. I don't have a scarcity mentality. You can go straight to her and get your policy straight from her. That's okay. Because I'm taken care of. I'm going to be all right. And I'm going to still meet my goal this year. But I just want you to know what my source is so you can see how reputable. Because this lady made Forbes 50 over 50. She's 58 years old. She made Forbes, Forbes, 50 over 50 for 2021. Where did he do that at? I think she's one of maybe three people that made it in the financial services industry. So at the end of the day, she's doing something right. And she wrote the book IUL ASAP. So you can understand why it's so important to have an IUL. Because that's how important her whole story, and she'll tell you her husband left her and her 3 children, no policy in place. So she has a passion to teach women how to do this business so that you can not have to worry that if something happened to your husband, you don't know how to do money. So she wanted to teach money to women so women understand how to do money. So if their husband was to expire, they would know how to do finances. They would know how to do, the policies and things of that nature. And so she's been the person that I've gleaned from the most in this industry, but there's others out there, of course. But her story is so powerful. My story is more around, I just want to help people to retire before they expire, because I lost my 2 closest friends in 2018 to the flu within 4 days. Think about your 2 closest friends that you have right now to you in a season, because seasons change. You got different friends that's closest to us. In that season in 2018, my 2 closest friends passed away in 4 days, unexpectedly and suddenly, because they had the flu. And guess what? They never really lived. Because one was a business owner, and the other one was an HR executive. All they did was work. So I said, if I can get more people to retire before they expire, because they can put their money in the right position their money to give them a lifetime tax-free retirement income, they would be okay. Moving from career to calling, moving from the left side of the quadrant to the right side of the quadrant, where your money's making money for you while you sleep. I say it like this. My name is Shateka, Husser, CEO of Husser Financial Solutions, where we help you retire before you expire. If that's you, we're the ones you hire. Our goal is to get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive. Because the biggest fear besides dying is outliving your money and your money running out. People are scared to run out of money. So if I can get you an income, but you got to start and you got to reposition your money. I've only had one person so far. We had a consult. Another one, like the lady, asked all these questions. Dragged me through the questions. I answered every question. He was ready to go. At the last minute, he changed his mind. People sometimes have this skeptic spirit about themselves, like they think somebody's trying to get them or whatever. I'm really trying to help, right? But like, I don't know, And that one individual, and to me, it's not like he didn't move forward. It's like, why? Why would you? All the facts. I'm not giving nobody like opinions. Like, this is Shateka opinion. Like, I'm giving you the facts. The fact is that you're paying 30 to 50% more in fees where your money is right now. The fact is that here's when you're going to run out of your money in your early 70s, like 97 or 99% of people do. They run out of money in the early 70s and they have to go back to work. The fact is, when you are in retirement, you're not going to have any type of death benefit. The fact is, you're going to pay taxes at a higher tax rate in your older years. These are facts. Like, I'm not trying to give you my opinion. And this is a chart that shows you when you're going to run out of money, versus if you did this plan tax-free retirement account that says that you're going to have income for the rest of your life. It's not what you want. It's not what you make, but you started late. I'm not telling you what you're going to make $100,000 when you're 65 and you're just starting at 46 years old. You should have started earlier. You need to put more money away. And oh, by the way, you got the money. You just got to reallocate it. You need to take it out the 401k and your pension, because guess what? Your pension are going to lose money in it if there's a market hit. I don't care how attractive you think it look. It's going away. So if I can get you to reposition your money into an account that's going to never lose money, that's the difference between the mindset that some people have. Some people, some people cannot be taught. It just has to be caught. They're going to have to learn it, absorb it, understand it. Some things you just can't teach certain people. So I want you guys to get it. But if you can't receive it because of something, there's a block somewhere, because it happens, there's a block, then unfortunately you're just going to see that. Let me see how your money performs for you in 10 years from now, and where you have it right now, wherever it is right now. I like it for people to just come back and tell me how their money performed. I want your money to perform, but you got to have it in the right. You got to have it in the right position, and you got to know that these vehicles are not going to lose the money, and that's where I'm at. I just don't want you to lose your money, because people are crying. They are coming into the office crying because the way that the financial advisor positioned their money, it didn't work. So, and they don't have to make your money make money. I'm coming with guarantees, guarantee that your money not going to lose. You're not going to lose a dime to the market, not one dime. But I'm just a little African American female from South Carolina. That's all I am. I don't know. That happened to serve my country as an Army officer for 7 active years. That happened to work for a $92 million operation annually. Yeah, that's all I am. But I'm down to earth, so people don't know that part of me. I don't talk about all that. I just try to help them with their finances. But either way, Brian, listen. You know, I can talk, but what else we got? Because it's an hour and 14 minutes.
Hey, you know, I got an early morning. See, I ain't retired. You know what I'm saying? You know, I'm trying. I'm trying to get. I want Shateka. Like, you know what? Like Torito Ghost, teach me the game. I want Shateka. Teach me the game, Shateka. Teach me the game.
Listen. I could teach you from where I'm at, but I don't know. I'm gonna go find it out. So what? So somebody type on the screen, type in the comments. What do you want me to answer that I did not answer tonight? What do I need to come back with? What I owe you guys? If I didn't answer something, tell me what I didn't answer, and when I come back next week, I am going to. But you need to put that on there. Today is Wednesday. Please have it on there by Friday. Oh my gosh, that just reminded me about a trip from last week. As I never checked that account. Brian, why you didn't remind me? I owed a young lady a trip.
Yeah. Oh yeah, you did. I remember that.
I owe her a trip. I'm gonna give her a trip too.
I remember that. Now I remember
that. Listen, if you on here, young lady, and you sent me the email like you were supposed to, because I didn't see it. No, I have my emails from that account forwarded, but I haven't seen it. Definitely text me which day you actually sent the email. So I can go try to find it. But yeah, I owed this lady a trip because I told her whoever answered first.
Yeah, you did.
Even though Brian answered first, he wasn't supposed to.
Wow.
Love the show, Brother Glaze. Peace to your beautiful host. Thank you, Roy. All right. Thank you, Sean. All right. Well, not a whole lot of comments tonight.
Yeah.
But
a lot of people
that wasn't answered tonight, definitely let me know so I can get on it and make sure that we answer it for next week. If not, we'll see you at the top because you belong there. Yeah.
I can't even top that one. You know, I can't even top that one. I can't even top it if I want to, you know. Hey, here it is.
You over there sleeping anyway. I'm just glad you didn't snore while I was talking.
Hey, look, you know what? Listen, I got a bad habit. If I'm sitting down, it's comfortable or whatever, I used to fall asleep in a barber chair. You know, like, man, and you know, no, you're right. If I'm sitting
Did you eat before this live, Brian?
You know what? I treated myself. I did. I treated myself. I
treated myself. Quiet tonight.
I treated myself at the Cheesecake Factory. I did treat myself. Okay. But that was earlier. That was around 5 o'clock, something like that. You know, so I treated myself. You know, that's the difference.
Yeah. Hey, but listen, I like being on your show. You let me talk, and I need an audience. So thank you for letting me get on here.
Hey, no problem. The difference right now is, you know, what we're doing, sharing, giving back. You know, like to me, it's best to give than receive. What this is, you having all that knowledge, but you're not sharing it with nobody. That's, you know, that's being selfish. You're not a selfish individual. The difference is you're a leader. You know, look what you did, you know, from the military to Walmart. I'm saying to Amazon.
Oh, like somebody want to bless me. I don't mean to cut you off, but when somebody want to bless me, I don't want to cut off their blessing. So we got to answer her question.
So what is your PayPal? She's asking for your PayPal.
Shateka Husser.
Mm-hmm.
Hi, Jen. Cash, money sign Shateka Husser. That's my Cash app.
And she said,
make sure we don't cut off her blessing because I used to didn't take from people, but I learned that you cut people blessing off when they trying to send you a couple dollars.
She said she booked an appointment online.
She did.
Mm-hmm.
Oh, PayPal, my PayPal. Oh, I'm giving her my Cash app. I'm not even reading right. I must be sleeping too. My PayPal is on paypal.me/she prizes. How should I say it? It's Shateka prizes.
Can you type it in?
I don't think I can. I tried it before. It's SH Enterprises. SH Enterprises. Shenterprises. So paypal.me/SH Enterprises. Shenterprises.
Oh, she could. That's right there.
Enterprises, but it's
that's right there.
There you go. Yes. PayPal.me/Enterprises. But I'm not taking anyone's money right this second. I am going to as soon as I can get this this course finished, there won't be no way to see me except for there will be no way that you could have a consult, like an individual consult with me. Like I will only be doing group consultations once I get this course finished. So because I do every morning at 7:30 a.m. I'm every morning I'm actually having a conversation about retirement tips. Excuse me. And I'm also having that conversation on Sunday afternoons at about anywhere between 1:30 and 2 p.m. I don't ever give hard times because things happen. But between about 1:30 and 2 p.m. ish on Sunday afternoons, I'm having a conversation about retirement. And then 7:30 a.m. Eastern Standard Time. All these are Eastern Standard Time, Monday through Friday. I'm having conversations about retirement. So that's like group coaching. And the reason why I'm not going to be doing like one-on-one because I'm scaling my business and I'm going to do more business to business type. So in other words, helping more people. I want to help more people. And so I have the ability to go into businesses like, Walmart, Amazon, and talk to their employers about these things and help employees and have these conversations and have them taken care of as well. So one-on-one would not work because I'm going to one-to-many. That makes sense. One-to-many. So platforms like this, churches, I'm going to be going to more churches. In fact, I'm going to a church next in February. I want to talk to more churches because they really need this information. Like for real, for real. We started off the conversation talking about church tonight and how, a lot of people there don't have money. And he was asking me, how did I come into this industry? What made me want to do it? I just saw I was always around a bunch of broke people, even though I wasn't necessarily broke as an adult. When I was a child growing up, my mother, she was a single parent. I was the oldest of 3 children. I was a latchkey kid. My mother worked all the time. I said, my children will never have to, work like that or have to worry about anything. I'm gonna make sure I get mine. And, and I went and signed myself up at the age of 17 to college. I jumped in a car with my friend and his mother and rode down to South Carolina State University and signed myself up. And then I've been on my own ever since at 17 years old. I've been just hustling, doing whatever I got to do. So military, corporate, all that. Now I'm a multi-dimensional investor / business owner. And times 2, and that's primarily what I'm doing now. But I just saw so many people broke, and I didn't understand because we serve the same God. Like, and my God, he's a God of more than enough, and he's not the God of lack. And I just want to. It's something wrong. I know what part of it is. It's not. There's no spirit of excellence in terms of how to do business and having real integrity and character and doing business. And God is not going to bless that. He's just not. So I see that that's where the biggest common denominator is from what I can see and me judging. We're not supposed to judge, right? Yes, we are. But at the end of the day, judgment starts at the house of the Lord. You didn't know that. But either way, I wanted to help these people like move out of state of poverty and learning it and learning to such an extent that I can teach and help them understand how to position their money. And then even with the whole situation that happened with my friends, I'm like, I'm not going to be working for the rest of my life like that. That was a big eye opener. Like they were 46 years old and 50 years old, but still, like you should have the option to stop working whenever you're ready to stop working. You should be able to stop. Bless you, Stephanie. Thank you for hitting the like button and sharing it. I am done speaking for tonight. My name is Shateka, and I am out.
Yeah, you sure? Huh? You sure?
I'm done speaking.
Okay. Hey, everybody, listen. Thank y'all for joining us on Glaze. When we hit here on here, when we hit, be on your platform. Wow. He's welcome anytime. CJ, he's welcome anytime. Hey, listen. Thank you everybody for taking the opportunity to join us this evening. Hopefully right now is, guess what, y'all was blessed, you know what I'm saying, you was educated, and right now y'all taking notes, and right now that's what it's all about. How do we get back? It's best to give than receive. Hey, thank you for joining us. Peace, love, and prosperity. See you next week, same time, same channel. Okay, thank you very much. Good night.
Good night.